Chris Versace is the CIO at Tematica Research and the portfolio manager for the Street Pro Portfolio. Thrilled to say he's taken a few minutes out of his busy schedule to join us here at the New York Stock Exchange on Fed Day. Nonetheless, the great Chris Versace, thanks for being here.
Thank you, Mr. Durkin. How are you?
I'm doing very well. I'm even better now that you're joining us. We get an interest rate decision, we get a forecast, and of course the press conference later on today at 2:30 p.m. What can Jerome Powell say to give this market a bit of comfort?
Well, I think if you look at the Atlanta Fed GDP Now number, that's negative for the current quarter. To the extent he's able to soothe the market and give some other data points that says, no, the economy, it's still on firm footing, more in line with what we see from the New York Fed Nowcast. That's at 2.7% positive. If he can paint that picture, relieve some of that anxiety in the market, we could potentially see the market move higher, even if he kind of tosses cold water on the notion of further rate cuts this year.
It seems like a foregone conclusion, at least according to the CME Group FedWatch tool. We love that tool so much that we're not going to have a ton of movement on rates today. But the dot plot projection, the summary of economic projections, what will you be looking for there that the rest of us should pay a bit of attention to?
So, there's a lot of data that we'll get, updated expectations for 2025, 2026, GDP, unemployment rate, but it's going to be the forward look on the federal funds rate that matters most. Now, why is this? Well, you mentioned the CME FedWatch tool. That says the market expects 2 to 3 cuts this year. Unless the economy rolls over, falls out of bed, call it what you will, given what we're seeing on the inflation front and prospects for additional tariffs, hard to see the Fed delivering 2 rate cuts, maybe not even 1 rate cut this year. So it's that updated set of federal funds projections that I think is going to matter the most.
You mentioned the T word, tariffs. T word could also be Trump tariffs. Take it however you want. What's your expectation for how Chairman Powell may address it or seek to not address it when invariably that question gets asked at the press conference today?
In my best Powell voice,
yes.
The Fed remains finely attuned to incoming data and will assess monetary policy as needed.
It's a great impression.
I try. But, again, the Fed's going to remain data dependent. Here's the thing. The next, to me, key piece of data is going to be, as it relates to the economy, let me say that, is going to be next Monday. That's when we get the flash March PMI from S&P. In other words, the first hard look at how the manufacturing and services economy are doing in the month of March. Inflation pressures or not, and employment. So that, I think, is going to be the opening salvo of economic data. And remember that when we got that report for February, it kind of showed people were concerned about the impact of potential Trump tariffs in February. Now we've had some movement, not as much, but some movement on tariffs. So I'm really anxious to see what this report has to say.
A potential stagflationary environment. We're hearing that phrase thrown around a lot. How are you approaching that as you see that in the headlines?
You're using that word, huh?
Yeah.
So on the inflation front, kind of like I indicated, if we just pay attention to the data, in recent PMI reports, consumer inflation expectations, sure, we are seeing that, let's just say, be sticky, move the wrong way. In terms of the stag part, that remains to be seen because we are getting conflicting, like I said, GDP forecasts. Atlanta Fed negative, New York Fed Nowcast positive. So we need more data to really determine that.
If you had to ask Chairman Powell one question at the press conference today, what would you ask him?
What are you seeing in the economy that says you don't believe what the Atlanta Fed GDP Now is saying?
Fair enough. What advice do you have for any investors who might be a bit skittish as they see market volatility day in and day out as a result of the tariff-related headlines as of late?
So I would say this. Odds are you're probably not buying the market, right? So pick your spots, right? Understand what you own, what you might want to own, what's driving their businesses. And as you kind of navigate the headlines, focus on where spending is happening. So that can be on the consumer side. Oh my goodness, consumers are tightening their belts, trading down. Okay, well, what companies are poised to benefit from that? Is it a Costco? Is it a TJ Maxx, for example, right? Because consumers will continue to spend even if they're not spending as much. So you want to capture that. On the other side of the equation, look, we know the AI data center build out is happening. We know AI adoption is happening. So, the pullback we've seen in the market, okay, it's reset expectations a little bit, fine, but take a look at the data, follow the data, figure out who's going to benefit from the data. That's where you want to put your money. And candidly, JD, that's what we do at the Street Pro portfolio.
So I wanted to ask you about it because it's great to be able to do an interview with an actual portfolio manager, which is awesome. Take us under the hood a bit about some of the considerations as of late, any key names you are seeking to take out or maybe seek to put in the coming quarter.
So I will concede that I just mentioned TJ Maxx, and we put that, or TJX companies, we just put that into the bullpen. So we're watching that. The stock has gotten beaten up pretty hard, but candidly, I'm a little concerned about what we could hear later this week when Nike, FedEx, and Micron report. Kind of builds into my larger concern about June quarter guidance from the S&P 500 basket of companies. Expectations are pretty high. EPS growth for the quarter is about 9% higher compared to the March quarter. Here's the thing, last year only grew 7%, so by default we're looking for greater earnings growth, but what have we seen? Concerns about the consumer, business uncertainty according to the NFIB Small Business Survey is near record highs, impacted tariffs, no need for companies to be heroes with guidance. So my concern is the market could be a little underwhelmed with January guidance.
From the lens of your expertise, last week a big headline, the S&P 500 reaching correction territory for people who hear that and maybe get a little skittish themselves. Take a step back and give us some big picture perspective about what a otherwise maybe somewhat healthy pullback like that means in the market from time to time.
Well, I mean, we see these, right? These are not, unforeseen events, right? I think the way it tends to go is we see 10% pullback, roughly once a year, something like that. Takes the froth out of the market, and it can be a nice buying opportunity. We at the portfolio did that last late July, August, when the market really fell apart. It was almost oversold. We kind of did our homework, picked our spots on a couple positions, and went forward. Now, this time around, we do have some greater considerations, uncertainties, like we're talking about tariffs, that sort of thing. So I think you need to be a little more careful, kind of let things play out a little bit. Let's see if those April tariffs actually happen. Let's see how the start of March quarter earnings and June quarter guidance rolls in. No need to be a hero. Take your time, do the homework.
Finally, a story in the world of business or any of the areas, the arenas that you and I are talking about that you wish we were focused a little bit more on or you think is not quite getting enough attention?
I would say the two new desserts at Chick-fil-A, boy, they look pretty good.
That is, what are the desserts? I don't know what they are.
One is a float and this other, milkshake thing. But, who doesn't love a good milkshake?
For sure, and who doesn't love a good treasure hunt? I'm still a big Maxinista, so I'm glad we worked in some TJX
there you go.
Into the conversation. Chris Versace is the CIO at Tematica Research, portfolio manager for the Street Pro portfolio. My good friend taking the time to join us at the New York Stock Exchange. Chris, thank you as always.
Anytime.